This pattern that you see here is called a sideways trading range. Basically, in a sideways trading range, what happens is the price doesn't really move up and the price doesn't really move down. Each one of these little bars you see, the red or green bars, indicates 1 day of price action. On the bottom here is the date. So you're looking at a period from May of 2009 to June of 2010. Roughly 1 year of price action you're looking at. So for a year, this stock didn't go anywhere. Now, the reason I took a chart, an old chart, is to show you something that's very interesting. Now, when I was a new trader, I was actually always thinking that, well, if I buy a stock that's moving higher, that's not good. I should wait to buy the stock when it's lower. But what I didn't realize is that when stocks are at 52-week highs, when they're at the highest price, there's little overhead price resistance, and that's what enables stocks to move higher. And let me show you what actually happened with this stock. It's very interesting from an educational point of view. First of all, we quickly identify that there's a trend line involved here. This line you see is called a trend line. We draw these trend lines by connecting peaks of where the price stalls and goes back lower. So we have one peak here, one peak here, one peak here, one peak here. Now something interesting happens right here in June of 2010. Notice how the price finally moves above that downtrend line. When we see this price move above this downtrend line, this is actually one of our Dragon Chart's buy signals. This is called a breakout above a downtrend line and a breakout above a long base of consolidation. We had 1 year price consolidation. So at this point, this is where we actually would, let me turn on my annotation tool here. At this point right here is where we would actually be looking to buy the stock anywhere in this price range, 125 to 130 rupees level, right when the stock moved above that downtrend line. And this is interesting because I'm going to show you what happens. What do you think happens? Whoa. The stock went from 125 to 165. That's basically about a 30% gain in a matter of 3 weeks, based on this buy signal of buying a break above a downtrend line. More importantly, look down here. These are the volume bars. This indicates the amount of volume that a stock is trading. And if you look at these volume bars, you'll see that we actually had very high volume coming into the stock. Basically, this is institutional buying interest. Mutual funds and hedge funds were supporting this price movement, and that helped propel the stock 30% higher. This is typical of the kind of plays we'd like to take with Dragon Charts, and what we teach our students to find is stocks that generally make about a 20 to 25% move within a matter of a couple weeks. We're not day traders. We're not buying and selling the same stock in 1 day typically, but we're also not long-term investors holding stocks for years at a time hoping that it moves up. We like to use technical analysis to take advantage of price momentum and try to get about a 20 to 25% gain within a period of several weeks. And that's exactly what happened here with GITG. Now, what do you think happens here? When I was a new trader, I thought, well, I can't buy this stock now. It's already too high. It already went from 125 to 165. That's way too high. But as I mentioned earlier, I quickly learned early in my trading career that the strongest stocks, they're strong for a reason, because people are buying them. And that's why they continue to go higher. So if you take a look here, look at what happened. Fast forwarding. Wow. This stock went from 165 all the way up to 225. So already after making a 30% gain, the stock trades sideways for a couple weeks, consolidates, and then breaks out again to go to 225. So the stock has almost doubled now in a period of 1.5 months. The stock has doubled. And all the beauty of this is that our buy signal was triggered way back here when it broke out of this downtrend line. So our students that subscribe with us and come to our courses and come to our daily stock analysis sessions, they would be aware of these price levels before the stocks make their big move. We help find these technical levels that we know over time have been proven to work. Now let's see what happened since then. Look at this. Wow, now it gets really interesting. Way back here, let me turn on my annotation tool. Way back here was our buy entry. Around 125 is where our technical buy entry was. Even if you missed that first period and you waited too long, you could still buy the breakout above this line right here. And then we had a period of sideways consolidation, and then another base on top of that consolidation, and then the stock went again all the way up to the 350 level. So basically a 300% gain in a matter of 4 months. Look at the volume. See all this volume compared to what the stock was trading in early 2010. Volume is the fuel that drives stocks and drives price movement. So we always look for high volume to confirm our stocks. Even back here when we first triggered a buy entry, notice how the volume started to pick up. And that's a signal that we teach our students to look for. So you can see here that stocks that are strong continually go higher, but they don't go straight up. They don't go to the moon like a rocket. They typically stair step. They move up, go sideways, move up, go sideways, move up, go sideways, move up, and they will continue that trend as long as the moving averages remain intact. Now let's look at the current price action of this stock and see what's happening. If we look at the current price action, okay, here we go. We finally got a big correction. This period right here is called a correction. Just as stocks, I said earlier, stocks don't go straight up forever. They eventually do pull back or correct, especially when they start to get parabolic, when they start to go straight up like this one. So this stock ran as high as $400, about a 350% gain from our entry point, but then it pulled back very sharply. In a matter of about a month, it went from 400 down to less than 200, 50% decline. Now, if you bought a course near the highs here, that's a substantial haircut you took on your position. But we teach our students how to buy at the proper entry levels when it is low risk, and also we teach them when to properly exit. In this particular case, our exit point would have come once the stock broke here below its 50-day moving average, okay, on high volume. So we're not trying to get out near the highs. We're trying to catch the bulk of the move out of the middle. In this case, getting out on the break of the 50-day moving average, that's the teal colored line, would have given us a gain still of about nearly 300%. Now let me remove my messy annotations there. And the reason this stock is interesting is because it looks like right now it's setting up again for a potential buy entry. If we take a look at this current price action now, this is as of today. This last bar right here is today. And take a look at what's going on here. We've got, again, a tight band of consolidation for the past month and a half in this stock. And more importantly, over here, we've got a lot of price support at the various moving averages. Do you see how the green line and the blue line and the orange line all come together here? That's the 20-day moving average, a 50-day, and a 200-day moving average, all providing support. And that enables the stock to move higher. And then now it's building a consolidation, and in fact we can even draw a trend line from down here to show the support as well. So the buy entry now for this stock is it can be bought above the high of the past 2 days. So today's high, yesterday's high was actually 294, and today's high was 293.30. So above 294 rupees, over the 300 level to be safe, is a buy entry, and our target would be a test of this prior high. We anticipate a test of that prior high before the stock runs into selling pressure. So that's a kind of an interesting example of what we teach people at Dragon Charts, and how we teach our analysis. Let's look at two other stocks. This is TTK Prestige, another stock that trades on the Indian National Stock Exchange. And in this particular example, all we're looking at here is just another similar pattern where we've got periods of price consolidation followed by breakouts. Right here you see this arrow we drew. Notice right here was the buy entry. On this bar right here, the big volume came in and the stock went above this 2-month period of sideways price consolidation. So there's our official buy entry, and we're looking every day for these stocks, so it's more like the stock looks like this, and we see this breakout, and that's our buy entry. And buying that stock, of course, it's been on a steady uptrend since then. Notice how the moving averages tend to act as price support. And here again, look what we've got going on. We've got sideways price consolidation. right here. Price consolidation, more price consolidation at the highs. So when this stock gets above the 28.75 level, above the high of this consolidation, we would anticipate a resumption of the uptrend. We expect the uptrend to continue as long as the trend lines remain intact. And again, this is something that we found triggered our buy criteria for entry way back when it first broke out above the high of this consolidation. And let's look at one last stock, and then we'll have time for some questions and answers. This one I like a lot right now. And for those of you who've been following our YouTube channel, on our Dragon Charts YouTube channel, we have a lot of videos on there. And one of the videos that we have is we have a daily stock analysis video that we do. And one of the stocks that's on that video is actually Delta Corp. And this was a stock we pointed out a few weeks ago. Now, since then, it hasn't actually made its move, but we still very much like this technical setup. First of all, we've got some trend lines here. And let's take a look here at our trend lines. We've got a steady uptrend here that you can see, which roughly converges with the 200-day moving average. But more importantly, what we like is this trend line right here off the highs. And do you guys remember only about 10 minutes ago, that first stock I showed you, which was GITG? Do you remember how this is exactly how the chart looked before it made its 400% move? It had a downtrend line that lasted about 6 months, and this stock is setting up the same way. So our potential buy entry, now this is the current price action. The stock hasn't made its move yet, so this is a valid buy entry right now. Our potential buy entry is if the stock gets above this level right here, the high of last week. So basically over the 90 rupee level, which is the downtrend line. And if that happens, much like the first stock we looked at, GITG, we would anticipate the stock to enter into a new uptrend, marching steadily higher. Now, of course, there's no way to know how high it's going to go, but we do teach our students in our classes how to analyze and determine when stocks are going to pull back. So, at this point, what I would like to do is actually go ahead and open up the forum for questions and answers. And the way this works is if you have any questions at all about anything we talked about or about Dragon Charts, you can type them in the chat window, and then one at a time I will answer your questions by audio.